Today, you'll find the true value of one of the largest retailers in the world that has lost quite a lot of its total valuation over the last couple of days. So I'll be doing a full stock analysis on the company Walmart with the ticker WMT. After going over its business model and its more recent earnings report, I'll make a quick fundamental analysis followed by a price prediction to determine whether or not it is a great buying opportunity at the moment. So without further ado, let's get to it right now. This business that is worth over $400 billion and that needs no introduction for most North Americans is operating a chain of hypermarkets, discount department stores, and grocery stores mostly in North America under their brand Walmart, but they also have different stores all around the world, notably in India under their brand Flipkart Wholesale. From electronics to food, passing by pharmaceutical and sports, you can find pretty much everything in Walmart that has been able to generate over $573 billion of revenue in 2022. All of this with about 11,000 retail locations in the world and with multiple e-commerce websites including shipping, transportation. It makes that over the last couple of years, this company isn't anymore a simple brick and mortar company, but also a company that has been able to adapt to tomorrow's environment, notably where the pandemic has changed many buying habits of different customers that are now spending a lot of their money online. However, the danger with this new e-commerce market is that now everyone can sell anything to anyone. It makes that in the retail market there are way more competitions than there was 30 or 40 years from now, and so now people are looking for the best products, but most importantly at the lowest price possible. The big advantage of Walmart on that side is that over the last couple of decades it has been able to solidify its brand as one of the cheapest shopping places in the whole world. But not only that, it also has some great marketing campaigns and a global supply chain and logistics system to ensure its distribution worldwide. But the profit with this type of business, as all of the different retailers in the world, is that they have some super low profit and operating margins, which means that they are not able to generate some super high profit margin compared to their total net sales. And at the same time, they are not recognized as being the best employers when it comes to giving the best types of wage and the best conditions of work to their employees. And in a labor shortage market, it means that they might have some difficulties to find great employees to keep on the long term. Add to this, we've recently seen that after the more recent earnings report of Walmart, their total price value has been dropping of about 12% on Thursday, and surprisingly this happened after a slight beat in terms of their total revenue, where they've posted some total revenue of about $160.8 billion, representing a total revenue growth of about 5.2% compared to last year, and with some adjusted earnings per share that came $0.01 higher than estimates. We've seen that these two news haven't been the cause of the drop in the share price of Walmart. In fact, this drop has occurred notably because of a slowdown in the economic activity in the second half of October, combined with cautious commentaries on the near-term demand outlook provided during the earnings call, because Walmart has assured that the US consumer continued to exert caution with their spending in the face of inflation and rising interest rates. All of these news came with Christmas at our door, meaning that many families might need to cut down on the spending during that period. And so this has raised concerns among all the different investors about this type of business. However, in the long term, I don't personally believe that this type of news will really affect the total value of this business, because obviously we've seen that they've still been able to generate some pretty good earnings report. Plus, we all know that Walmart isn't the most volatile stock, and since the beginning of the year, it is still up of about 8%, and by still being one of the top places for people to go shop by if they want to buy great products at a cheap price, it means that even throughout inflation times, they will continue to go buy at this type of store. So despite all the different harsh economic conditions that we are currently facing, this type of company is still here to stay. But now let's see what the valuation metrics are telling us about the true value of this business. First, we can see that Walmart is currently worth about $480 $18 billion, but with a pretty average price to earnings ratio. However, when we take a look at the price to sales ratio, we can see that this company would be currently undervalued, but with the price to book ratio, it would be overvalued. In terms of the profitability of the company, as I told you earlier, they have some super tight profit and operating margin. However, with a pretty good return on equity over the last 12 months of close to 20%. Over that same period, we can see that Walmart has generated some revenue of over $638 billion. And in terms of the debt of this company, we can see that they have a quite big debt of close to $70 billion. And with a debt to equity ratio of about 81%, it is showing that this company is still quite dependent on the fluctuation of the interest rates. Now, in terms of the volatility of this company represented by the beta on a 5 year period, we can see that its beta is quite low, showing that this company won't fluctuate that much compared to the overall market. And over the last 52 weeks, we can see that it has only gained close to 3% compared to about 14% for the overall market. Plus, Walmart is also giving close to 1.50% of dividends to their shareholders with a super low payout ratio, showing that the dividend is quite sustainable on the long term. And over the last 4 years, we can see that Walmart has been able to continuously grow their total revenue. And in terms of their total earnings before interest and taxes, we can see that they have been able to grow them pretty well, except in 2021 and in 2022 because of the COVID. But since that point, we can see that they are now regrowing pretty well, where they are close to $26 billion of earnings in 2023. Now, in terms of their operating cash flow, after growing quite well in 2019 and 2020, we can see that with the effect of the pandemic, they've started to slow down in 2021 before to restart to grow in 2022 and now over the last 12 months. And the scheme is pretty much the same in terms of their free cash flow that have been massively diminishing in 2021. And now, to determine what is the true value of Walmart, I'll be using, as always, many different valuation models, starting out with the Pillar-Lynch ones, which is a simple formula where you add the future growth of the earnings per share with the dividend yield and that you divide by the total price to earnings ratio. And with this formula, we can find that the results are showing that this stock would currently be quite overvalued right now. Now, the second model, which is the dividend discounted model, is also showing us that this stock would currently be massively overvalued right now. For our third model, which is the discounted cash flow model, will be coming discounting all our future free cash flow. But first, we need to find our discounted rate, or our WACC, which is found by calculating the cost of debt, the cost of equity, and the cost of debt and equity, which is giving us our WACC. And with this information, we can find that this company would currently be slightly overvalued compared to its current price. And finally, we'll be using the Graham's original value formula and the Graham's revised value formula. And in both cases, we can find that the intrinsic value is showing that this stock is also quite overvalued right now. As you've been able to see in this video, Walmart has recently seen a slight decrease in their total valuation because of the projection of the slowdown of the economy over the next couple of months and years. And even if the different valuation metrics have shown that this stock might be a little bit overvalued right now, Walmart is still a very strong company in terms of their business model in their field, despite having a lot of competition, notably because of the low price of the products that they are able to propose to their different customers. And so this has helped them to generate some great total revenue growth and some great earnings growth over the last couple of years. So if you're generally looking for a very stable company that will give you some great dividend income, it might be a great interesting pick to have on your watch list. But now on your side, if you're looking for a company that has a lot more potential of return with a little bit more risk compared to Walmart, well, check out the video that's gonna be right over here, and I will see you soon. Peace!